Hi guys, my name is Andrew from Stockmoney Lizards, and today I'm really excited to talk to you about Heiken candles and about how they can make your life a lot easier. So let's jump right in. Heiken candles are famous for basically filtering out the noise on charts. As you can see, on one side you have Japanese candles, which are constantly changing from bearish to bullish. These are two of the exact same charts. On one side you have a noisy chart, on this side you have more of a cleaner, tighter chart. So if we look at the anatomy of structure using Heiken candles, normally at cycle bottoms what we see is doji candles with shadows at the top and at the bottom, and these signal indecisiveness or market turnings. And then you have slightly bigger bodies with shadows at the top and at the bottom. And this shows slowing in momentum. What normally happens then is you get a change of momentum to the upside or the downside, and confirmation of continuation of movement in price is the fact that you have a body and you have the shadow at the top if you're bullish, and from the downside you have the body and you have the shadow at the bottom. When you get the body and the shadow at the top and at the bottom over here, as we're seeing, then what we're basically saying is that there's going to be slowing of the price going down, and so we're just aware of this information. If we look closer, what we can see also is that you have situations where you have lots of candles with small bodies and changing of colors. Essentially what you're doing here is that the trend has paused and will resume later on. Once again, this is just an example about how you can have, and when you're going for an uptrend, no wicks at the bottom is a good thing. When you have two wicks at the top, that's a signal for a let, like there might be a change in price coming soon. And then finally on the way down, you can arguably say that the price is going to continue going down until you see a shadow at the top, and rinse repeat. Now I just want to go into the Bitcoin chart. So what you're looking at is Heiken candles on the Bitcoin chart. We had, let's go back to the last 2 months of the bull market, October and November. We had 2 bullish months with shadows at the top. We were then given a very good warning that prices are probably going to start coming down because we had the body and we had the shadow at the top and the bottom. We had our first signal that price is going to start moving down in January and February of 2022 with no shadow at the top and one only at the bottom. We had a moment, which was March of 2022, where we sort of said to ourselves, maybe sort of in these 2 months, maybe we can actually go back up. And I remember this it was 2 interesting months. And then sort of the confirmation of the downtrend came in May of 2022, and since then we've had 1, 2, 3, 4, 5, 6 months with 6 bodies, no upper shadows and only lower shadows. And basically what we can take from this is that sort of if we just adopted the Heiken way of interpreting a chart, we could have actually really forecasted what was going to happen with this price of Bitcoin. So what's happened recently? Recently, we're on our second green month. We mentioned this in the Discord channel that sort of finally after about 12-13 months, we finally printed our first green candle, and this green candle has a shadow at the bottom and a shadow at the top. This means that the momentum to the upside might actually start. And currently we're on quite a nice candle with no lower shadow and a small upper shadow over here, which could be the start of the bull market in full force. Why? Because if we look back at the past bear market of 2018-19, what we can see is in similar fashion, the Heiken candle printing downside, and then we had a doji candle printing a potential reversal in price, and straight after we we experienced 1, 2, 3, 4 candles with upper shadows to the top. Chances are we might be seeing something go along these lines on the monthly. So I forgot to add that we are currently looking at the at the monthly. So if I zoom in and go to the weekly, as you can see, we had small bodies of candles, which was basically signaling reversals, and this carried over 1, 2, 3, 4, 5, 6 weeks. Then we had a very healthy 1, 2, 3, 4 weeks. We're now seeing a candle with a slight shadow at the bottom, so we know that potentially there could be some form of pause in the market price moving to the upside. So this is why I will now jump to the 4-hour time frame. So if we go back to the 30th of January, we had basically at this point identified that there is quite a good opportunity for us to go back down and retest levels of 21.16 USD, and then finding some support at this level and making a push to the upside. So this is something that can happen. I also want to have a look at the 2019 breakout. So at this point, the 2019 breakout was basically when we broke out from 4,000 to 5,000, making a high at 5.5, 5.8K. Basically what we did was we printed a high, another high, and a third, a low, a higher low, and another low, and this basically lasted for I would say for about 33 days before making the push to the upside. If we look at the current situation here, we did make one high, we did make a second high, we did make a third high. That follows suit with the 2019 breakout, which is good. We did make a low, a higher low, but now we're sort of treading in muddy waters. Why? Because we sort of didn't hold. Had we come down from here to this level and found support here, then I would say that we're looking good for a breakout, but we didn't. So we're just aware that if prices do crack 22.5K, then we're expecting to find support at 21,000, which is fine. Other than that, we seem to be following a similar pattern to the 2018 breakout. As we saw here, this was roughly 33 days. If we take this from this level here, we're currently at 20 days, and if we take it from this level here, we're at 27 days. So I would say that in about 5 days time we should know more or less what's going to happen. Are we going to break down to the upside, or are we going to break down and are we going to find support in this area? You know, we are living in different times compared to 2008 and 19, so that needs to be taken into consideration too. Cool. Okay, so now I just want to jump into Ethereum, and the reason why I want to jump into Ethereum, guys, is because there was some late night news, for me at least, on Twitter yesterday. Brian Armstrong tweeted, "We're hearing rumors that the SEC would like to get rid of crypto staking in the US for retail customers. I hope that's not the case, as I believe it would be a terrible part for the US if that was allowed to happen." To be honest, I don't really understand what he means by this, but if he does mean that the SEC are going to be cracking down on proof of stake blockchains, then that means that Ethereum is probably at risk, Cardano's at risk, Solana's at risk to be regulated in some way. I have no idea. So it's one thing I'm going to be looking out for. Once again, we've been trading in this area for quite a while now. I'm expecting something to happen in the Ethereum Bitcoin chart. My level is 0.067. We seem to have come down, but we found the base at this level. I'm wondering if we're going to come down and retest 0.058, and then that bounce is going to be really interesting. If we do move up and we retest 0.082 again, then I'm going to be super curious to see what's going to happen there. You know, cool. So this has been an Ethereum update. I forgot to mention one thing with regards to Bitcoin, which I think is worth a mention very quickly. If we look at the CMF once again, we can see that the CMF on the weekly time period is currently now pushing at 0.01 in the past, and it has been stretching over in negative territory for quite some time now. This is 50 days, or 350 days. The last time we were hovering in this area was roughly 400 days. If you minus this stint over here, if you minus this over here, that's 21 days, and this is 14 days, so that's about 35 days. So it's about, we're more or less in the same boat. What happened every time we hit the zero mark so far, which is interesting to note, is that the CMF hit zero, buying pressure comes in, and sort of we make a move to the upside. What's also interesting is that the last time we were in this situation, coming out of a long extended period in the negative territory on CMF. Sorry, I'm trying to zoom in. We were actually in this area. So at Stockmoney Lizards, we've been posting charts reflecting that we might actually be in this area. So if the CMF does match up to reflect the last time we were here, then it is interesting, because once we broke through the zero mark, we sort of made a nice run to the upside, you know, and we remained in positive CMF territory for quite some time after that. There was one other time I wanted to mention, which was in 2015, 14, 13. So we came down, we're struggling to be in this area for quite some time. We broke out of the CMF. Now in this case, in 2015, we didn't really make such an advancement. So we sort of, well, we went up 28%, and then we came back down 35%, you know. So this is what happened in the past in 2013. We did not come back down when we look at the 2019 breakout, but we're keeping a good look at this. We do expect prices to come down to 21k, and that's more or less it, guys, for today. I hope you've enjoyed this talk. I hope you like high Kanashi candles. I really do. And sort of in future, I was considering starting to talk about other stuff like forex markets and equities. So let me know if you like that format, or if you want to hear about more assets. Let me know in the comments, please. As always, this is not trading advice. Have a great day, guys, and stay safe.